Good morning, everybody. You're very welcome to this morning's webinar on auto enrollment. Firstly, I'd like to do a quick sound check just to make sure that everybody can hear me. So on your control panel there on the right-hand side, you should have a question bar. So if you could hear me, if you could just type in a Y or a yes, and then hopefully we can begin in a couple of minutes. Okay, great. I'm getting a lot of hellos there. Right. Let's begin. So firstly, my name is Karen Bennett. I'm the marketing manager here at BrightPay, and I've organized all of these webinars that we're running over February and March. The BrightPay auto enrollment webinars are specifically designed for accountants, bookkeepers, and bureaus that have payroll clients. So today's webinar will aim to make it easier for you to help your clients with their auto enrollment obligations and highlight methods to streamline the auto enrollment process. Our first speaker today is Paul Byrne. Paul is the Managing Director here at BrightPay. He is also a chartered accountant, having previously spent 20 years working in practice. Today, Paul will share his fairly unique insight into what auto-enrollment will mean for accountants and other payroll bureaus, along with his thoughts on how to capitalize on this new business opportunity. Our second speaker today is Robin Armour, and Robin is a Business Development Manager at the National Employment Savings Trust, or NEST, and has over 15 years' experience in the financial services, predominantly working in the corporate pensions market. Robin is an experienced public speaker and has an in-depth knowledge of the pensions landscape and the intermediary sector. Robin is part of a team responsible for working with intermediaries to raise awareness of the NEST operating model and online services. So today, Robin will present NEST, helping make auto enrollment work for you. Now, you're quite welcome to type in any questions throughout the duration of the webinar. Again, as I said, you have a question bar on the right-hand side of on your control panel. And at the very end of the webinar, we'll have a 5 or 10-minute Q&A session, and we'll try to get through as many questions as we can. But don't worry, we'll also send a full list of all of the questions along with the relevant answers to everybody after the webinar. Now, the good news today is we have a free competition. So the competition is for a BrightPay Bureau 2015-16 license, and we have not one but two to give away today. So the competition is open to all attendees who stay for the entire duration of the webinar. Okay, so let's begin. So I'll pass you over to Paul, and Paul will present employer duties under auto enrollment for payroll bureaus.
Okay, thank you for that, Karen. Hi, everyone, and thanks for joining us today. Just want to get this headset in place properly. Okay, just a small bit about myself to start off. My background is as a practicing accountant. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff before doing something completely different and moving into software development full-time. While in practice, I provided payroll bureau services for about 30 clients, so I know what it is like in the front line, and I lost all of my hair in the process. This was a huge part of my motivation in getting into payroll software development, that is, to make better software than what I was using at the time. Although I can't claim full credit for BrightPay, which is written by someone younger and better than myself, my fellow director, Ross Webster. But Ross and I together ensure that it has or will have everything you guys need. So far, our payroll software is used by 65,000 employers across the UK and Ireland. Okay, so here's the agenda for my slot today, which I hope you will find informative. The agenda may have had some minor tweaks since originally advertised, but the overall message is unchanged. When talking, I will often refer to auto-enrollment or automatic enrollment as AE. And for those of you who have tuned into any of our previous webinars, apologies if I end up repeating some of the points previously made. Unfortunately, this is unavoidable. Okay, a quick recap on what AE means. And just to note that this is only a summary. AE is a vast subject, and some areas are highly complex. It would take days, even weeks, to cover the subject properly. At the end of the day, you should not need to have an in-depth knowledge of AE. It is up to your pension provider and payroll software provider to filter out all of the noise for you. AE is new law, meaning that every employer must automatically enroll workers into a workplace pension scheme if they are aged between 22 and state pension age, earn more than £10,000 per annum, and work in the UK. Employees may not see any changes if they are already in a workplace pension scheme, which is a qualifying AE scheme. Their workplace pension scheme would usually carry on as normal. In such cases, the employer must communicate with the employee explaining this. For employers who don't already make pension contributions, they will have to, by law, when they automatically enroll every worker. The overall aim of AE is to increase the retirement savings of the nation, particularly the low-paid who tend not to save. Some research here conducted by the Pensions Regulator. 74% of small and micro employers expect to turn to an intermediary. 59% of them are likely to ask an accountant for help and guidance. The 5 millionth worker to be automatically enrolled was Siobhan Sharp, Marketing Officer at Rose Theatre, Kingston, Surrey. As of this month, this figure stands at 5,153,000. As at the end of January 2015, 44,053 employers have completed a declaration of compliance with the Pensions Regulator. Here are some figures for penalties issued by the Pensions Regulator. There has been a total of 2,161 AE penalty or compliance cases closed to date. This includes 1,316 compliance notices and 169 fixed penalty notices. The number of compliance notices has increased nearly tenfold in the most recent quarter as smaller employers start to stage. A full breakdown can be found on the TPR website. A massive 1.2 million small and micro businesses are set to start staging from June 2015. Payroll advisors are more than aware that the majority of these employers will not have the knowledge or experience to make informed decisions when it comes to their AE obligations. With the vast quantity of information available, employers are fast becoming confused, bewildered, and overwhelmed as to what their responsibilities for AE actually are. New figures released this February from the Pensions Regulator show that 7 out of 10 employers say they will ask a business advisor for help with automatic enrollment. Whether you're a payroll professional, bookkeeper, independent financial advisor, or accountant, a change in the law means that your clients may ask you about workplace pensions. Just make sure you're prepared. According to a report by the Pensions Regulator, the activities that most payroll administrators were undertaking or planning to undertake were to find out their client's staging date, 87%, maintain employee records, 86%, identify eligible workers, 85%, and work out the cost of the pension contributions, 80%. It should be further noted that 75% of payroll and HR professionals believe that their clients will wait until the last minute to seek advice on AE. When an employer reaches their staging date, an hour or two should be sufficient to deal with AE tasks, which include enrolling all relevant employees, communicating as required to all employees, and setting up and commencing employee deductions and employer contributions. From that point on, it is just a matter of monitoring employees, submitting contribution files to the pension provider, and managing employees who opt in and opt out. Some payroll software monitors the ages and earnings of employees in each subsequent pay period to see if any further enrollments are required and if any new employees should be enrolled. Each of these enrollments should only take minutes to process. A point of note is that an employer may decide to postpone AE for 1 or more employees for up to 3 months. Apparently, some employers believe that if they choose to postpone all employees for 3 months at their staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive a communication within 6 weeks of the staging date relating to the postponement and explaining when they will be enrolled. If this communication is not issued, then the postponement effectively never happened, and enrollment must be completed retrospectively back to the staging date, which will in itself be a nightmare. So that's just one to watch out for with your clients. Provided that accountants have payroll software that will work in their favor, there is little work involved in the AE process. Staging is the most hands-on task involved, and although it can take an hour or two, it will become easier and faster for accountants for every new client that is staged. Before staging, the employer or the bureau acting on their behalf should register with a pension provider. Again, this should not take too long. Registering with Nest, for example, should take no more than half an hour. AE does not need to be a major headache for accountants or bureaus and their clients, provided that they take some time to make sure the right tools are in place. AE should become a seamless part of the payroll process, much like RTI. For large, repetitive, or time-sensitive tasks, the speed of automated AE offers significant cost savings to bureaus. This will be especially relevant when employers approach their bureaus close to, at, or even after their staging date. Employee communications will play an important part and is often considered the most challenging part of the process. Payroll and AE software should be able to handle staging, employee assessment, postponement, all employee communications, ongoing monitoring, opt-outs, and refunds. Integration with AE pension providers will also be a key consideration to think about when weighing up the various payroll solutions out there. If automatic enrollment is not already included with your current software provider as standard, you may have to pay additional costs for AE functionality and support. Bureaus obviously have the option to consider an alternative software package that has AE features included and no hidden support charges. If changing payroll software, it is always easier to effect the change from the start of the payroll year, thereby avoiding any of the complications of mid-year change. For example, importing cumulatives, ensuring RTI fields are correct, etc. If you have payroll clients, there are 5 important things to consider which will improve profits and increase the turnaround of payroll clients. It will be important to engage with the small and micro employers that have not yet staged. These employers will be required by law to automatically enroll eligible employees into a qualifying workplace pension scheme when they run their payroll on their staging dates, assuming they are not using postponement. The first thing to do is to find out your client's staging date to start planning accordingly. It is possible to look up the staging date on the Pension Regulator's website if you have their PUI information. Be aware that if you decide not to process AE, there will be a risk that you will lose some or all of your payroll clients. The impact of automatic enrollment will affect your client's business now and for the foreseeable future. The Pensions Regulator continues to enforce fines and penalties for non-compliance. Not allowing enough time to plan could lead to your clients being fined. AE penalties range from £50 to £10,000 depending on how many employees your client has. Non-compliance fines range from £1,000 to £5,000, and civil penalties range from £5,000 to £50,000. In 2014, the Pensions Regulator fined 169 employers for failing to comply. By planning ahead, it will allow you, on behalf of your clients, to avoid hefty penalty fines. By understanding employer AE obligations, a bureau can position themselves as an authority figure who is open for AE business. Employers outsource their payroll processes to you because you have the know-how and it saves them time and money. Today with AE, it is not only about cutting costs for employers, but trusting you as a payroll professional to make sure they are fully AE compliant. Furthermore, some employers may not have the competency, time, or know-how to handle AE. Once employers have confidence in your knowledge and ability, they should be open to the idea of outsourcing these AE tasks to you for a chargeable fee. Payroll software will play a vital role even in ensuring the success of AE. Without the appropriate systems, bureaus will need additional time and resources to plan for AE. Payroll software can provide the necessary functions to automate the employer admin tasks. You will need to know which employees need to be automatically enrolled and which employees can opt in. Payroll software can access all relevant payroll data to establish who will be eligible, not eligible, or entitled. The regulator urges bureaus and employers to check with their payroll software provider to ensure that the software will correctly identify the duties you have for each category of employee and to see if the system will support the requirements of AE. Automatic enrollment is presenting bureaus with a unique platform to increase profits. There are a huge number of small and micro employers due to stage between now and 2018. It will be important to capitalize on this window of opportunity. By offering AE as a chargeable service, bureaus can add additional revenue streams, provide added value to existing clients, and increase the possibility of bringing new clients on board. It further provides a competitive edge to you over other bureaus that refuse to provide AE as a service to their clients. So you need the correct payroll tools in place to streamline the AE process. Fortunately, modern innovative solutions exist that can automate these AE chores. Armed with the employer staging date, bureaus can now simply enter the date to assess each employee's eligibility for AE at the staging date. Good payroll software will further handle all employee AE communications based on each employee's eligibility or individual eligibility. Okay, so I'm going to just take a little bit of time here for my plug. BrightPay is payroll and AE software that will enable bureaus to help their clients prepare for their staging dates. BrightPay is an all-encompassing solution that works to automate and simplify the AE process, making it as easy as possible for you to help your clients achieve compliance. With BrightPay, you can benefit from unlimited employers, unlimited employees, free phone and email support, all for just £199 plus VAT per annum. You can also benefit from a 60-day free trial, which has no limitations to the software. Okay, I would now like to hand you over to Vicky for a 2-minute talk showing you just how easy AE can be. Vicky is our BrightPay support manager, and in this example we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. Registering with Nest should take only 30 minutes on average to complete. So before passing over to Vicky, my own opinion in the matter of AE providers is that most small employers will choose Nest because it is government-backed and it has a mandate to accept all employers, no matter what their size. And it has been preparing for the auto enrollment tsunami for the last few years. Having said that, BrightPay will also accommodate the People's Pension, Now Pensions, Scottish Widows, all of which are great schemes, and this list is constantly being added to. So thank you, Vicky.
Now, hi everyone. So as Paul has just mentioned, we will take a look at a company who are using Nest as their auto-enrollment pension provider. We'll also assume in this example too that they have received their staging date and that they are due to stage on the 1st of May 2014. Okay. So as soon as you know your staging date, simply click into the Employer section within BrightPay and enter it in the designated field provided. Entering your staging date here will ensure that your on-screen alerts will kick in at the correct time for you. Setting up your pension scheme in BrightPay is also straightforward. Simply select Pension Schemes, followed by New, and select the pension scheme from the listing. So in this instance, we would be selecting Nest. So for a Nest pension scheme, simply enter your employer reference in the field provided. And on the following screen, just enter your group details exactly how you have set them up with Nest. You'll also see on this screen that you can also set the contribution rates that have been chosen. So returning to the payroll screen, as soon as your staging date is reached in the payroll, BrightPay will automatically assess each employee for you and will determine whether they're eligible, non-eligible, or entitled workers. You'll also see these on-screen alerts now appear, and simply clicking on Go will bring you through to the options available for the employee based on their work status. So you'll see here that we have Alexander Gregory, and he is a non-eligible job holder, so we have 4 options available. So first of all, we have the option to write to him to inform him that he has the right to opt in. We can then opt him in, we can postpone him, or mark him as exempt. So as you are required to inform the employee of their right to opt-in, BrightPay will automatically create the opt-in letter for you, and an extract is on the screen here. This can be printed, and it can also be exported for emailing to the employee. So should the employee decide that they wish to opt-in, simply click on opt-in and select the pension scheme from the listing, so in this instance, Nest. Okay. BrightPay will then automatically create the enrollment letter for you. And again, we have, sorry, to return to the previous screen. And again, this can be printed or exported for emailing to them. And the enrollment letter will include details on the staging date, the contribution rates, and how the employee can opt out should they wish to do so. So once an employee is enrolled, you will see the contributions flowing through onto the employee's payslip at the appropriate rates. And once finalizing the payslip, the contributions will also flow onto the printed payslip for you. BrightPay will also produce the enrollment and contributions file for you for upload into Nest web portal. And just with a click of a few buttons, the user will have the option just to save the file to a location of their choice and upload when ready. Okay. So that completes the short demo. Just to finish that, just as a final note, our 15.16 version of BrightPay is going to allow the batch processing of employees. So for example, the option to enroll or postpone a group of employees all at the same time as opposed to on an individual basis. This will greatly benefit, for example, bureaus who may have a number of AE clients, saving them time. So I'll now pass you back to Paul for the next section.
Okay, so just to leave you with some of BrightPay's key takeaways, on my slot anyway. By automating the AE tasks, bureaus can reduce overheads per client, increase staff efficiency, and increase bureau profits. Ensure your solution has everything to prepare your clients for auto enrollment. Check to see if there are any hidden charges when it comes to the number of employees, employers, and the level of support that is provided. Beware of exorbitant hidden costs. Try to implement whatever solution you adopt from the start of a tax year. Be proactive by educating and communicating directly with your clients about what is involved for them and what you can do for them. And just to let you know as well that our R&D department is in full swing. During 15.16, we hope to roll out an optional feature, which for the time being we are calling either the Accountants Portal or the Bureau Portal. Basically, this will be a web page branded with your logo, controlled by you, where your clients can submit payroll information, hours, etc., for easy import into BrightPay. This will cut down on transposition errors, speed up processing, and hopefully make you look really good with your client. There are many other things that we are planning as R&D and innovation are key to us. Okay, before I pass you over to Robin, if you did have any questions in relation to BrightPay and AE, please type it into the chat bar now so that we can get through as many questions as we can in the Q&A session. So I'm delighted to pass you over to Robin Armour, who will present Nest, helping make AE work for you. You're very welcome, Robin.
Thanks a lot, Paul. Okay, everybody, so hopefully you can all now see my screen. And good morning, and nice to speak to everybody. So what I'm going to take you through is a short summary of how we at Nest can help you make automatic enrollment work for you. Nest as a scheme is built for automatic enrolment. We were set up by the government to help employers meet the legal duties set out in the Pensions Act of 2008, but we don't just meet the regulation, we go above and beyond those requirements. Nest is a very well-run scheme. We're a trust-based scheme, so we're run by a board of trustees. Those trustees have a series of governance and committees that ensure that the scheme is run in the interest of the members and for those members' benefit. the scheme is entirely run online, which means that all activity with Nest is done online. So you would set a scheme up online, you would enroll members online, you would pay contributions online. That means you can deal with the scheme 24/7 as and when you wish to do so. It also means the same for members. As I mentioned, Nest was established by government. We were set up to deal with automatic enrolment, and we believe that provides a lot of comfort to employers and to those people recommending Nest to employers, that Nest will be a suitable solution for automatic enrolment, that we will tick the boxes required, and that we will be doing the right things to ensure that members are getting the right outcomes from automatic enrolment. Nest is a not-for-profit scheme. So as I said, we're run by our trustee board, we're running in the interests of our members. We're not there to pay profits to shareholders, so all the money that Nest generates is spent running the scheme and making sure that the scheme works for members. And all we are is a pension scheme. All we are is a qualifying workplace pension scheme. We just do automatic enrolment. That's all we do. We're not going to try and cross-sell any other products to employers. We're just there to give them a really good pension scheme for automatic enrolment. Well, what does that mean for employers? We believe that what it means is a lot of key aspects of Nest are suitable for employers. So Nest is free to use. It's really key for employers, particularly as we move into the small employer market, that what they see is that Nest is a free-to-use scheme, and it doesn't cost them anything to set a scheme up with us. Nest is low cost for members, so everything that we do is in the interest of our membership, and the scheme is set up to ensure that the charges to members are highly competitive and at the minimum levels that we can manage. Nest is the same for everyone, so the scheme setup process, the way the scheme runs, the way the scheme manages, the charges, the structure of the scheme are exactly the same for the small employers coming to duties in the future as they were for the large employers who staged with us back in 2012 and 2013. A feature of Nest is that we've made the opt-out process very easy for employers and people acting on behalf of the employers to deal with. So it's very simple for members to opt out with Nest, stay directly with us. That's really important from the employer point of view, because the employer doesn't want to get engaged in the opt-out process for fear of being seen to induce members to opt out. One of the key features of Nest that we've introduced is the ability for other people to help run Nest on behalf of an employer. Much of the research we've done with small employers tells us they'll be looking for help and assistance. We've looked to create something with our Nest Connect functionality that allows people to step in and do things on behalf of the employer. And we'll have some more information on that as I go through the presentation. And finally, we've got an award-winning default fund. Default funds are a key part of automatic enrolment. All members, when they're enrolled into a scheme, must be put into a fund without them making any choice. What that means is those funds must be really suitable for those workers, because our experience to date and all the information we have from the pensions industry over a number of years shows that many workers won't change their investment decisions. They won't engage with that part of automatic enrolment or that part of the pensions industry. So it's really important that what we have is designed to suit members, and our funds are in every way designed to suit the members that we get and to ensure that we're working towards good member outcomes for them in retirement. And we're already winning awards for the way we do that. We believe that Nest works for members. The scheme is great value. The charges on a Nest scheme are roughly equivalent to 0.5% per annum for members over the lifetime of the general savings process. We believe that to be incredibly competitive. Before automatic enrolment came into place, stakeholder pensions had a limit of 1.5% for the first 10 years and 1% thereafter. The new charge cap restrictions that are being brought in by government are around a 0.75% per annum charge cap. So Nest compares with that very favourably, and Nest will be very much in the interest of giving a great value proposition to our members. We believe that clear communications are really important for the workforce. Most members of automatic enrolment schemes don't understand the information they're given around pension schemes. We believe that changing the language of pensions is important to help people understand. So all our communications are built from our A to Z phrase book of pensions, and what we've done with that is we spent time testing pensions language with members, with the public, to make sure that the way that we spoke about pensions made sense to people. From that, all our communications are clear and easy to understand, and that cuts down on the number of queries that employers and members will have around what the communications they receive mean. Nest is also really easy to use, so from a member's point of view, if I want to change anything on my Nest scheme, I can just log in on the web and input the new information that's required or change the decisions I wish to change. It's really straightforward, it's really simple. It's a lot like online banking, which we know many people are now very comfortable using. And the other feature that we think is really important for members is Nest One Pot for Life structure. So what this means is that any member of Nest will only ever have one pot with us, no matter how many different employers they may work for who use Nest. So if somebody joins Nest with employer A, and in the future they move to employer B, and employer B also uses Nest for automatic enrolment, the member's money will continue to be saved in the same pot. We manage that through the members' data, through their unique data around their national insurance number, their date of birth, their name, to ensure that we know which member's which. We don't require any information from the member, from their employer, to say they previously saved with Nest. We'll find them based upon their personal information and ensure they keep that one pot for life. That's really important, because one of the things that members told us in research was that they were confused by having multiple pension pots through their life, and they were struggling to see the combined value of their pension savings. So we think this is a really key point in ensuring that members understand their pension, engage with their pension, and can see the value of it. We also believe that Nest works for professionals. We understand the role of professionals in assisting employers with automatic enrolment, and we know how key that's going to be. What we see is traditionally pensions advisors would work around the processes of understanding regulations, helping with the assessment and planning, and helping with scheme selection. But what we've seen develop around automatic enrolment is a series of new tasks and challenges that need work, and these are where we see the payroll professionals really stepping up to the mark, in being that those people who are used to dealing with administration tasks on a regular, weekly or monthly basis are really seeing opportunities here to develop their offering to clients and to develop the support they're offering to clients. And what we're seeing there is people using our new Nest Connect hub to enable them to get schemes up and running, to manage schemes on behalf of employers, and to help those employers with their compliance monitoring. The Nest Connect hub is a third-party hub where you can set up your business on Nest to enable you to manage schemes on behalf of the employers that you work with. Through this process, it's possible for the employer to have minimal engagement with their pension scheme if you wish to offer them the opportunity to provide a complete will-do-it-for-you service. We think that creates great business opportunities for people in the marketplace who want to offer administration services for clients, and those can be from as simple as helping them get up and running right through to a complete management of the scheme on their behalf. You can see on screen a couple of our Nest Connect case studies, and these are people who are already engaged with the Nest Connect process, and they're already using this to help them help their clients. And you can see some of the quotes that they've said about how Nest Connect can help them in that position. There's a lot more information on our website. If you go to nestpensions.org.uk, you can find the Nest Connect areas there and see a lot more information about how simple it is to set up a Nest Connect account for your business, and how much support there is there to help you with that, and how easy it will be for you from Nest Connect to help your clients and to build a proposition that working with your payroll provider will enable you to offer a holistic service to them. So we talked about the Nest proposition, and I said that we were an award-winning investment structure. Well, don't just take our word for it. Here's a list of some of the awards that we've been winning for the way that we invest members' money. We have the IPE, which is Investment Pensions Europe Awards in 2014 for diversification and best industry-wide pension fund. We have IPE awards from 2013 for best risk management solutions and best use of defined contribution and hybrid structures. We've got Engaged Investor Awards from 2013 for the best investment strategy and best defined contribution investment initiative award, and we've got Investment Pensions Real Estate Awards for the best newcomer to real estate investing in 2013. What all of these do is give real comfort to employers and to those people recommending Nest on behalf of employers that the solution they're recommending really will be working hard in the best interest of their members. It's really important that for the schemes that employers select, that the employer understands how that scheme will work for their workforce. Increasingly, we're seeing discussions about the importance of governance on pension schemes and the importance of the employer being able to justify the decision they've made. We believe that picking Nest is a justifiable decision because of things like the investment awards that we've won and also the communications awards that we've won. So we've won awards for Workplace Savings and Benefits, the Auto Enrolment Innovation of the Year in 2013 for our Nest Connect functionality, and the winner of Communication Innovation of the Year in 2013 for our campaign around Better Tomorrow's Worth Saving For. What we also have at Nest is the Pension Quality Mark Ready certification from the National Association for Pension Funds, the NAPF, and this in effect is a pension industry quality mark that says that the Nest scheme, provided the employer makes sufficient contributions, meets the NAPF's independent quality mark criteria. Again, it's a stamp, a kite mark that says that Nest is a high quality pension scheme and that employers can be comfortable that Nest will be doing the appropriate job for their members. So a little bit about who's using Nest. You can see on screen some of the large employers' logos for employers who've selected to use Nest as part of their automatic enrolment scheme. What you can also see is that to date we have around 11,000 employers who are using Nest as part of their automatic enrolment solution, and we have around 1.9 million members. And we're stacking that up against the figures that Paul quoted earlier. That would suggest that around 1 in 4 employers are choosing to use Nest based upon the about 44,000 employers he said had registered with the Pensions Regulator. You can also see that we've got around £335 million of members' money now under management with us, and that figure is growing rapidly day by day. In summation then, we believe firmly that Nest works for employers, for members and professionals. We believe that the scheme we've developed gives employers comfort that they're selecting a cost-effective, high-quality arrangement in the interest of their members. We believe it's a scheme that members will trust and engage with. We believe it's a scheme that members will save with for their working lifetimes. And we believe that what we've done enables professionals to support employers and support members through the process to provide services that can be part of your professional offering to your clients to make sure that automatic enrolment works for everybody. It works for the employers, the members, it works for you as the support industry, and it works for Nest as the pension scheme. If you're interested in learning more about Nest, then please visit our website, nestpensions.org.uk. We have an advisor section there. We have specific sections for payroll, for accountants, for advisors. We have an events section which highlights our own webinars, and please feel free to view those. There are webinars we've done previously that are saved. You can watch again. There are also links to future webinars. You can follow us on Twitter at Nest Pensions or on LinkedIn at linkedin.com/company/nestpensions. Thank you very much for your time this morning, and hopefully this has been of value and informative for you. And finally, just to confirm a small piece of legal information, please, if you could just take a moment to read what's on the screen. In summation, this just advises that we don't make personal recommendations or give advice at Nest. I'm not a financial advisor, and if you want financial advice, you should seek an appropriately qualified advisor.
Okay, that was great, Robin. Thank you very much for that. And we have a few questions coming in as well that I'll be passing over to you to answer, hopefully. Can you hear me, Robin?
Paul.
Okay,
yes.
Good. Just to say on the you see useful links and resources up on the screen there. We will send these out to everyone along with the PowerPoint, so that you have those handy. One of the ones I kind of recommend is an article I did for Accounting Web called Auto Enrolment for Dummies. A bit disrespectful, I know, but it gives you basically a 10-minute core of an hour read, and probably gives you a good feel on what you need to know when your clients come asking. Okay, so just I suppose we'll go over to the questions and answers slot at this stage. Robin, one of the questions that's come in that I think you could probably answer better than I, can a client or can a bureau actually recommend Nest? I mean, I think they're a bit worried about that one because, you know, probably legislation, whatever, saying that they can't do things.
So it's an interesting question. There's a lot of debate about what constitutes advice and what doesn't in the marketplace at present. I think probably the guidance I would give is that advising an employer on selection of a workplace pension scheme such as Nest, a trust-based scheme, isn't a regulated activity. So you don't have to be a regulated individual to do so. I think what we're seeing a lot in the marketplace is less that accountants and payroll bureaus are looking particularly to provide advice, as that they're defining a service offering that works with 1, 2, 3, a limited number of pension providers, and they're making a point of saying to their clients, we can support you if you choose one of these providers from those that we're working with. If you wish to go with another provider, we might not be able to provide that support service, but other providers are available in the marketplace.
Okay, so it's not actually investment advice they're giving, it's more a practical advice as to what works with their systems and so forth.
Yeah, exactly. I think what we're seeing mainly is that those people in the accountancy and payroll bureau space are defining their propositions of what they can do, because it's understandable that many of them don't want to have to define a structure that works with 14 or 15 different pension schemes. That will become very complex for them. So they're picking the schemes they want to work with, they feel they can work with and are comfortable working with, and defining a proposition for a limited number and offering that proposition to their clients.
Okay, excellent. I'll just give you some more questions that actually are more about Nest than BrightPay for the moment, if you don't mind. The first one is, how far in advance can a Nest scheme be set up? I suppose that's in advance of the staging date.
Yeah. So one of the beauties of the Nest system, I think, is that you can set a scheme up as far in advance of the staging date as you wish. Particularly if you're doing so as a third party, you're in control of the process, so you can do that sort of as and suits your business needs once you've got the appropriate data from the client. I think where that's really useful is as we go forwards, we're going to see months where there's huge numbers of employees come to duty in that particular month, and even for a bureau or an accountant who's only, say, got 100 clients, possibly 50 of those clients or 30 of those clients will stage in the same month, which will be hugely challenging if you have to deal with all of those in the 4 weeks before that month, or even the week before that month if they don't want to engage too soon. So what we're seeing is lots of people are mapping out their own timeline of when their clients will stage, and then engaging those clients around their busy periods early to say, look, we can get you set up in plenty of time, you just need to give us the appropriate information so we can do that.
Okay, and how do they make sure they have all the information? Any
Good
guidance
question.
there?
Yeah, so we have on our website, we have a PDF document. entitled The Information You Need to Set Up Nest. It's a form that you can either complete as a PDF, so you can type straight into the document, or you can print it off and get that completed by a client. And again, if a form is completed, you know you have information to set up a nest scheme. So what we're seeing is those people who are engaging in the process of offering a setup service for clients, providing them with that form in advance, asking them to complete it, generally offering to, a call or a visit to support them in doing that, because there will be questions the client doesn't understand around, some of the technicalities of automatic enrolment. And once that's completed, the intermediary, the payroll bureau, the accountant then knows they've got all the information they need to set that scheme up. And if they're well in advance of the client's staging date, they can then do so at their leisure when it's appropriate for them.
Okay, thank you. And just as a matter of interest, are there any sort of main common mistakes employers would make when setting up an S scheme?
Yeah, I think the most common mistake that we've seen is probably setting up Nest in isolation, i.e. that they've not done it in conjunction with their payroll system. So they haven't thought about the information they set up in Nest that needs to go into the payroll system. And there's a couple of key bits of information that we need to come out into the files that the payroll system creates, and there are sort of group names and our payment structure names, or the bank accounts you're going to use, the name you give to those, and also the date structure, making sure that the date structure for the system they set up in Nest, i.e. the frequency, monthly or weekly or 4-weekly, and the start and end dates of those months, whether they be first to the last of the month or tax periods or whatever those may be, make sure they match the system. The advantage to that, or the problem of not doing that, is that the payroll system will automatically produce the data it holds into the format Nest requires, or at least good payroll systems like yours will, Paul, and then the client will upload that data to us. But if they haven't matched the scheme they set up with us with what they've input into your system, the two sets of data won't align, and they'll have to make manual adjustments to the file.
Okay. Another question that's come in, and I think I'll rely on your pension expertise for this one. How do you know if a pension scheme is AE compliant? In other words, if it's a qualifying AE scheme.
It's a good one. So the best place to get that information is the Pension Regulator's website. There's some key criteria that a pension scheme must meet around contributions, around charges, around having a default fund, and there's lots of good guidance on the regulator's website. The other thing is, if you've got an existing pension scheme and you're not sure if it's going to meet the criteria, I would suggest engage with that pension provider as early as possible to find out from them. They will be able to tell you if your scheme will be compliant, and they will also be able to tell you whether they'll accept all your members or your employees as members into that scheme. One of the issues we've seen a lot, particularly with large employers, was that because they had a scheme, they assumed that scheme would accept all their members for automatic enrolment. When it got closer to the staging date and they engaged the provider, they discovered that wasn't the case, and they had to go and source a second scheme for those workers the existing scheme wouldn't accept.
Okay. And just one other question for you, Robin. Is there telephone support with Nest?
There is, yes. So we offer telephone support. We offer a large amount of support on our website. So there's lots of guides and question and answers sections. There's lots of information and short video clips on there that are really supportive. We offer live chat facility, which is a really quick and simple way to get answers to questions that aren't covered by the help session. And yes, there is a helpline as well.
Okay. I'm just going to deal with some questions that are probably related more to BrightPay, just for a few minutes.
No problem.
First one, okay, thank you. The first one here is, will BrightPay 1516 show the employee's age? Yes. The date of birth is obviously an essential field for auto enrolment and determining whether somebody's an eligible or non-eligible job holder. So yes, it will. Confirm the cost of the payroll software. Is it multi-user? Well, the software for a bureau to be able to do unlimited number of employees is £199 plus VAT. Multi-user, well, yes, basically that £199 entitles you to up to 5 installations in your office. and each of those users can access the same file, but not, they won't be using the same file at the same time. Next one is, how does BrightPay deal with opt-out refunds? Okay, well, in the first pay period where somebody is auto-enrolled, it will deduct the amount and do the employer's contribution on it. If that employee subsequently opts out, it will accumulate those deductions and contributions and basically refund them on the pay slip of the opt-out period. When is 2015-16 available? Well, we hope it'll be available mid-March. How does it integrate with RTI? Well, it doesn't really integrate with RTI. It basically runs alongside RTI. It's basically just one more thing to do after each pay period. But there's no actual integration as such. It's kind of, I suppose, the AE functionality is kind of standalone. Is there a restriction with the number of employees? No, there isn't. A couple of more questions on BrightPay. Does it handle CIS? BrightPay itself doesn't, but what we are doing from the start of 15-16 is we are basically giving our other product, CIS Assistant, complementary to anybody who has a BrightPay license. Can you import payroll data for large employers? Yes, we have a facility that will basically import CSV files with all the necessary information, and I think most other payroll software has the ability to export that CSV file. So we have various help sheets and video help on how to do that. Let's see. If any of the questions I don't get to in this particular session, we will send out the answers, the questions and the answers to everyone later on in the day. What if a payroll client wants a different pension provider than those listed in BrightPay? Well, as I say, we hope we will have a lot more pension providers catered for in the coming months. Also, I don't know if you're aware, there's a project called Penalties, which has been worked on. It's not quite finalized at the moment, but that is to allow a common data standard for all pension providers. And I think, Robin, you can probably confirm this. I don't think Nest will be part of that initially. The Penalties.
Not at this stage, no. We did a lot of work and consultation about what people wanted from us, whether it was changing our existing dating standard to the PAPDIS one or working to develop ways that we could improve the way that we receive data. And generally the view we received was most people had already built to our data standard. They were happy to continue to do so, and they prefer us to work hard on trying to improve the way that data comes to us and to make that process more sophisticated, which is what we're looking to do as we go through this year.
Yeah. I mean, I must say it's a great project, the PAPDIS project, but I suppose it'll take a bit of ironing out. I think one of the issues I had with it was communications. It didn't actually specify in the file as to who was responsible for the communications, because in some cases the actual pension provider wants to handle some of the communications. Other pension providers prefer that the employer handles those communications. This is one of the things I didn't find that was handled sufficiently in the PAPDIS spec at the moment.
Yeah.
I think we've probably run out of our time slot here. So, Robin, listen, thank you very much for taking part today, and I'm sure the attendees got great value out of what you had to say. And I suppose we'll wrap it up with that. Okay. Well, thank you, everybody, and thank you,
Thanks, Karen. Thanks, everyone.
And Vicky and Robin. Okay. Cheers. Goodbye.